Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts Emily Parker, Coindesk's Executive Director of Global Content, and the Thai Director of Content, Lawrence Lewitton. Let's take a look at what's going on in the markets, starting off with Bitcoin. The Coindesk Bitcoin price XBX index is currently at 26,515, down about 1% in the last 24 hours. Doing kind of a whole lot of nothing this morning. Let's take a look at what's going on with Ether. The Coindesk Ether price ETX index is at 1,849. And DeFi, the DFX Coindesk DeFi index is at 99.50. Lawrence, Emily, good morning.
Good morning.
Morning.
All right. The Binance news just keeps coming in. This morning, we heard lawyers for Binance say that SEC Chair Gary Gensler should be recused from the case because he once offered to serve as an advisor. Apparently, there was a meeting back in 2019 where CZ and Gensler had lunch in Japan. And then after that lunch, Gary Gensler allegedly offered to advise Binance. Lawrence, what do you think of this? If this is true, should he recuse himself?
It depends on what they define as offer. It depends on what the meaning of is. Look. So of course, there's a revolving door between private sector and public sector. I mean, that's the American way. But we don't know exactly what could have happened here. It could have been something like, "Oh, so what are you doing here, CZ? Oh, well, I'm doing this and this. Oh, yeah, you probably need to find an advisor, to do something. Well, how about you?" He's like in the middle of like a salad or something. He's like, maybe I'll get back to you, right? See, He offered to be an advisor for us. No, the guy was having a salad. Like, you just don't know what the conversation was. That's the problem. It'd be nice if Chair Gensler kind of went into more detail. Again, he was kind of out there. Although this sort of reminds me, if Binance's story is true, then it's almost like a cartoon. It's like, I'll get you kids for not hiring me. It's like not as. That's just kind of the version's kind of funny.
That reenactment is great, and I'm sure we'll call it back up. Should we get more information in this case? Emily, what did you think?
I'm sure that reenactment will come up again in the Oscar
I'll be doing that
season.
For Congress.
Thank you for that, Lawrence. That was really vivid. I think, but I agree with the fundamental point here. There's a lot of information we don't know. I guess the one thing I would say is that Gensler gets some credit for uniting a famously decentralized industry against him. So, this is like the one thing that everyone in crypto seems to agree upon is that, they're not too keen on Gensler and the SEC's approach.
Emily will be playing CC in this version. We're doing it in community theater. I'm gonna write the script now.
Should this career not work out for all of us, we will be at a community theater near you. I agree with both of you. I think Binance's lawyers are going to throw everything at the wall. And this meeting happened in 2019, and we would definitely have to know what happened after that meeting, if anything came from it, to understand if it's actually a conflict or not. But lawyers, they got to throw everything at the wall and see what sticks. That's part of their job.
That's why they're paid.
Exactly. All right. Let's get into our first guest this morning. Bain Capital crypto partner and head of regulatory policy, TuongVy Lee, joins us now to chat about just this, what's going on with the SEC. Welcome.
Hi, everyone. Thanks for having me back.
Of course. Thanks for being with us. Let's get right into it. The SEC has been criticized for regulating by enforcement. Just giving your experience and watching what's going on here, what do you make of their moves?
First of all, I think, even though these cases may have sent shockwaves through the industry this week, neither of them were surprising. Both of these cases have been expected for some time. It was just a matter of when it would happen, right? And then even in terms of the specific charges in them, even a lot of those were expected, especially after, the SEC sued two smaller crypto exchanges earlier this year, Beaxy and Bitrex. And the main charges in the Binance and Coinbase lawsuits largely mirror those, acting as an unregistered exchange, broker, and clearing agent. And then even the staking charges in both of these cases were no surprise. They, again, largely mirror the allegations in the SEC's case shutting down Kraken's staking service earlier this year. And in my view, it makes clear, I think there were some questions after Kraken happened, whether the SEC would consider any kind of staking service to be compliant. And I think it's pretty clear now that they probably would only say that self-staking, where you're literally setting up your own node, is okay. I think they're saying any kind of staking as a service is probably a security. But besides those charges that were largely expected, I think there are some interesting additional ones in both Binance and Coinbase. So, of course, in the Binance case, there are charges there that really seem to echo what we saw in FTX, right? These allegations that Binance and CZ, were fraudulently representing that Binance and Binance US were totally separate and independent entities when they really weren't. And then we saw allegations after that CZ was diverting like $12 billion worth of customer assets. He was misusing them and using them to fund like some other entities of his. So, I mean, I think that's pretty explosive. And again, it sounds very FTX-like. And the other unusual thing is that they ask for all kinds of temporary and preliminary injunctive relief. So this is basically when you go to court and say, you have to let us act immediately to seize or shut something down or freeze assets because there's imminent danger that customer funds will be lost. So that's pretty remarkable. And it's not something that the SEC does often. And it's also important to keep in mind that they're not asking for this in the Coinbase lawsuit. Right. So I think those are some of the interesting things in Binance that were maybe unexpected. And then for Coinbase, some of the unique charges there are the SEC is alleging that Coinbase's prime brokerage service and its self-hosted wallet offering were unregistered brokerage services. And this is really notable because I think this is the first time that the SEC is alleging that a self-hosted wallet offering, which is basically just a non-custodial software product that allows you to connect to a decentralized exchange to trade. It's the first time that they're alleging that a self-hosted wallet offering is providing a brokerage service. So I thought that was really interesting to see.
So I know that we've talked, first of all, happy to see you back on the show. And we've had a lot of people on this show and just in general in crypto and in Twitter talking about this whole idea of, Coinbase really tried hard to register, but, the SEC wouldn't let them and they kept getting stonewalled. But I think you'd be particularly well placed to actually go into the details about that. What do they mean when they say we tried to register, we tried to work with the SEC? What can you break that down for us?
Yeah, so, I don't know if you guys caught there was a really interesting congressional hearing this week, and one of the witnesses in that hearing was Dan Gallagher, who is the head of Robinhood, so Robinhood is actually, it's more than one entity, right? It's main entity where you can go online and trade, a whole host of traditional securities, just like a lot of online brokerages allow you to do. So they have that, but then they also allow a small number, like a much smaller number than something like Coinbase or Binance, a small number of crypto tokens. They also allow their customers to do that, but they allow them to do that through a separate Robinhood entity, right? So he was asked in this hearing, well, you're an SEC registered broker dealer. Robinhood is, right? Can't you just move your crypto over to your registered broker entity and let your customers trade them there? And he said, no, the current regulations do not allow crypto assets to trade alongside traditional securities, and the infrastructure is not there. So that's why they have to do it through a separate entity. And he said they've been working for 16 months to get what's called a special purpose broker dealer license from the SEC that would allow them to let their customers trade crypto through a broker license alongside the traditional securities that they do under their registered broker entity. And the SEC told them no. So this idea that you can just come in and register and that no special accommodations, whether it's, new regulations or new legislation needs to be made for crypto. It's just not true. And I mean, a lot of it is by virtue of the technology, right? So you can trade crypto 24/7, 365 days a year, whereas with traditional securities exchanges like the New York Stock Exchange or NASDAQ, the trading hours are much more limited. And then for traditional securities, in order to trade through an exchange, you have to do it through a registered broker. With digital assets, this isn't necessary because you can conduct trades directly without the need for an intermediary, right? So if you've tried to force crypto into that existing securities regulation mold, you'd lose out on real-time settlement without it being really clear like what risk you're trying to address exactly, right? As long as the exchange isn't engaged in market making or anything else that could create a conflict of interest by them acting essentially as both the exchange and the broker, there's no real reason to force those into two separate functions or entities, right? So requiring a crypto exchange to do that would basically mean that they couldn't act like a crypto exchange anymore.
Just to clarify one point here, though, because I think this is really interesting. Like, there's a lot to tease out here, but basically, it seems like, you know, the SEC is saying, oh, like, as you just said, like, okay, you're not fitting into this box, right? But like, couldn't you argue, and I know that, like, you know, nobody on crypto Twitter would argue, but couldn't one argue that like the SEC kind of has a right to take that position, just in the sense that, yes, they have one box, right? And that's their box. And if Coinbase doesn't fit that box, then like, that's not really the SEC's problem, right? Like the SEC is like, okay, here's what it is to become a securities exchange. For all the reasons you mentioned, you do not fit into the box of a securities exchange, but it's not really the SEC's responsibility to change what those categories are. It would have to come from somebody else like Congress. I'm just curious what you think about that argument.
Yeah, I mean, I think that is a legitimate argument, right? And I think that is the view that a lot of people in the industry take. And that's why they're turning to Congress to act and to say, you know, there's just no way for a crypto exchange to legally exist under the existing securities laws without basically transforming the very nature of it. I mean, if you're just trying to recreate traditional finance, I guess you could fit it into the existing mold, but it would just be like, it would be nothing like in its current form, right? So I think a lot of people do take that position, which is this isn't the SEC's place to act. Congress actually needs to come in because what a crypto exchange is just so different than what the existing securities laws can accommodate. And so Congress should come in and create a new model where a crypto platform can register and comply with requirements that actually address the unique risks that crypto trading presents, right? Which are very different from traditional exchanges. Like, I mean, just as an example, if you're talking about something like custody, right? So with traditional exchanges, with traditional brokers, there are really like strong requirements around what it means to take custody of customer assets, customer securities, and who is allowed to do that. Custody in the traditional securities context means something very different than what it does in the crypto context, where, you know, a crypto platform, a crypto exchange like Coinbase is typically taking custody of customer assets, and they'll, control that custody through like private keys, right? If they're self-custodying some of these assets, there are other forms of custody that they engage in, but one form is they manage the private keys, right? I mean, that obviously poses a lot of different questions and potentially risks that just don't exist in the traditional securities context, right? The other sort of unique things about crypto exchanges and crypto trading have to do with clearance and settlement, which works very differently on a blockchain than it does in the traditional securities context, right? Like in the crypto context, you have to ask questions like, when does the legal transfer of the ownership of a crypto asset occur? Like, what happens in the event of a disruption, like a 51% attack, or other issues that could arise when crypto assets are being transferred on the blockchain? What happens in the event of a hard fork, right? Does the owner have access to the new asset that might result from the hard fork? These are questions and risks that are totally unique to blockchain. And, that the existing regulations obviously do not address at all because this hasn't come up in the traditional securities context. So, Emily, I think you're exactly right. A lot of people would argue that trading in crypto and what it means to be a crypto exchange or a crypto broker or a crypto custodian, all of those things are very different in the crypto context than they are in the traditional context. So much so that the SEC can't even address it. It has to be Congress and it has to be totally new legislation. And that's what, much of Congress is working to do right now, right?
Thank you very much. That was TuongVy Lee, partner at Lee Bain Capital Crypto and head of regulatory and policy.
Thank you.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Not only is it time for my landscapers to do the lawn in the back here, it's also time for Coindesk Policy and Regulation Managing Editor Nick Day, who's also the editor of Coindesk's absolute must-read State of Crypto newsletter. The gardeners have finished their copy today very early, and they've gotten to work since. Good morning, Nick.
Good morning. Your gardeners have been much more on time than I have this week.
Yeah. So Coinbase CEO Brian Armstrong says they'll continue Coinbase will continue its staking service, even though they're facing a lawsuit from regulators, including federal regulators. What's his argument here?
Yeah, this is honestly, kind of fascinating to me. So, the SEC has sued Coinbase, and the staking program is part of it. Sure, completely, that's happened. What's really interesting to me is that there's also 10 state regulators. Some of them have asked for an immediate cease and desist or desist and refrain order to stop Coinbase from offering the staking program. So the fact that, CEO Armstrong seems to think that, they have a legitimate argument that this is not a violation of securities law and that they do not plan to shutter the program at all is kind of fascinating to me. It's, it's really throwing the gauntlet in the face of all these regulators who, again, 10 state regulators, some of them are giving them a couple of days or a couple of weeks to respond, but many of them have asked for this immediate, cease and desist.
Let's move over to Binance here. There's already some important dates when it comes to the SEC filing temporary restraining order. What's coming up for Binance as we follow these two cases that came one after the other?
Yeah, so June 12th, Binance has a deadline to respond to the SEC's application for a temporary restraining order. That is Monday. On June 13th at 2 p.m. Eastern, which coincidentally is the same time the House Financial Services Committee is holding a hearing on crypto, there will be a hearing in the D.C. District Court on the application for a temporary restraining order. And, again, just to recap, this is the application the SEC made to try and freeze Binance U.S. assets until such a time that Binance Global and its management, namely CZ, are no longer able to access these funds.
Nick, we spoke about it at the top of the show, and we have to get your opinion in here. What do you make of these allegations that Gary Gensler once offered to advise Binance? Should he recuse himself from that case, as Binance's lawyers are saying?
I'll take them as two parts, right? The first part is the connections between Binance and CZ. And I would say that, if you're a regulator, you probably have a different view than if you are not a regulator. So Gary Gensler, as an MIT professor, probably has a different view on Binance's operations in 2018 or 2019 than he does as the chair of the SEC in 2023. Some of the allegations that we're seeing as well, in the Binance lawsuit are, conduct that happened over the last 2 years. Allegations that Binance US was spun up as a way to give Binance Global access to customer funds from Binance US or from the US. So those are more recent allegations. As far as the recusal aspect goes, I think that would have to depend on just how involved Chair Gensler was in Binance's operations. If he has inside information or close personal friendship or something, then maybe. But it sounds like he had a couple meals and offered to advise them on the regulatory structure, which at the time, he said was uncertain. And I think, arguably, I think one of the arguments that exchanges are making now is that it's still uncertain and just as uncertain. But that's, kind of, it's a different question, right? Then, like, that part specifically doesn't lead to a recusal question, I think.
All right, we'll have to wait and see what happens there. Nick, thank you for joining us this morning.
Thank you.
That was Coindesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com. Coming up after this break, we'll take a look at what's going on in the markets.
So now let's dive into the crypto markets with Valkyrie Chief Investment Officer Steve McClurg. Welcome back, Steve.
Hey, thanks for having me. And I'm still reeling from watching Night at the Improv with Lawrence earlier.
Thank you. Thank you. You will play the role of Jesse Powell in our UCB skit. Binance, speaking of parodies, BNB token, it's up today. It got down to a 6-month low. What's going on here? I mean, first of all, why is it back up? What do you think the market is thinking is going on with BNB, given, you had a little bit of, you had some money leave the exchange a little while. And, we also saw some, there are alts that the SEC might maybe deem as a security, or pretty much said so in their lawsuit. Those guys got crushed. What's going on here, and what does it mean for a general crypto market, and what does it mean for altcoins?
Well, I'm going to be the first to say that I don't know what's going on.
That's good.
Just like FTX, we never had exposure to FTX. We couldn't figure out what was going on there. When we were evaluating them, over a year ago to work on their platform, we couldn't get the proper due diligence, so we never used them. Binance, same thing. I don't know if they're solid. I don't know if they're a scam. Frankly, I don't care. We took a look. We passed. Never worked with them. Never held coins there. And I say all that because I think a lot of other people are feeling the same way. So that overall sentiment is probably what's driving the price of BNB and what's driving people removing coins from the exchange.
Did you have lunch with CZ when you were looking at them?
I've actually never had lunch with CZ. I did meet him briefly once. actually this year. Yeah,
don't run the SEC
but,
now.
I've never had a conversation with him.
So I kind of want to get to the macro stories, but just real quick, because obviously we're seeing interest rate hikes in Canada. The Australians, are looking to, they've raised rates. People still care about Australia. U.S. though, next week it looks like the market pretty much has decided that it's not going to raise rates. You look at what people are predicting next week. 25 basis points not happening. It's going to be 0. But July, market's predicting 25 basis point hike. What gives?
Yeah, I'm in that camp as well. I think it's very prudent that the Fed has decided to stop raising rates at the moment, primarily because we do have a banking crisis on our hands right now, and we also have a dollar confidence crisis. So if you look at the number of deposits that have left the U.S., we're talking about $650 billion in banking deposits have left the U.S. this year. And U.S. isn't the only one. Switzerland has also seen a large amount of deposits leave its banking system as well. And they're moving to places like Singapore, Dubai, other jurisdictions where they feel like their money is a little safer. So, and with continued interest rate hikes, the Fed would put many other banks in danger and to further lose that confidence. So that's why we're on pause. A lot of people are also pointing to CPI data saying, well, CPI is down. It's just north of 4%. It's likely to go lower. We're trending downward. I actually think that we're just in a reversion to the mean scenario with inflation, where 4% plus is still very high, but we're not seeing the 12 to 18% clips. But I do likely think that we're going to see that again. I think, I'm watching oil very closely. I believe oil will probably double in price this year, which will drive the rest of inflation. And that will force the Fed to continue to raise rates to try to stave off inflation through the last half of the year.
Steve, thank you very much for joining us this morning. That was Valkyrie Chief Investment Officer Steve McClurg. Next up, we are going to dive into Apple's latest announcement right after this break.
Welcome to Coindesk TV, your 24/7 news source in the Bitcoin, blockchain, and digital asset space.
People use digital assets for hundreds of reasons.
Every single asset in the world is going to be digital.
I feel like Gen Z could really take this space and run with it.
What's going on here, guys? What are we doing?
We're breaking this news on your channel.
There is so much interest in getting into crypto right now.
I don't foresee any glass ceiling anytime soon with this.
Here's our Coindesk Bitcoin News Roundup.
It's great for the world. It's very bad for Bitcoin.
This is amazing. I want one of these. I don't know, there's only 250 of them.
Tune in 24/7 to Coindesk TV.
morning and welcome back to First Mover. Apple announced the details of its Vision Pro mixed reality headset on Monday that could possibly revolutionize Web3 and the Metaverse. Coindesk Executive Director of Global Content, Emily Parker, is here. She's been here all morning to break this story down for us. She's still here. Emily, we didn't really hear a lot of Web3 chatter around Apple's announcement. Tell us about the announcement and how it relates to our industry, or how it could relate to our industry.
Yeah, so I feel like that's the big question here. So obviously there's been so much press about this Apple launch and just how crazy expensive it is, which is, a conversation for another time. But, even though people are throwing around the use of the word metaverse, it's very unclear what this means for Web3, if anything. So I think what's interesting here is that there's kind of like two different uses of this term metaverse. I think, there's what the kind of Web3 industry and the crypto industry, they think metaverse is a crypto thing. And I think most of the general public just think of metaverse as kind of virtual reality and has nothing to do with crypto at all. And Apple's announcement, Apple's launch basically seems to fit more into the latter category. Like this, at least on the surface, is not a Web3 thing. It's not a crypto thing. Now, the part about this that's really interesting is that in the past, Apple has been heavily criticized for being very unfriendly to crypto. Specifically, Matthew Ball, who, is a metaverse expert. We've had him on the show. He has a book about the metaverse. He has like a whole section just talking about how Apple is basically like hostile to Web3. And he came on the show and he talked about it. And he basically said that Apple does not permit crypto applications. And, so this is a very interesting tension. Now, I reached out to Matthew just before this segment just to kind of see if he had like updated his thinking about this, or if he thought that this was kind of maybe a new era for Apple and crypto. And he was just basically like, no. He said we can sort of see his comment here. He said, I expect the Vision Pro to be similar to, if not more restrictive than iOS. And he also said that, but one of the things that he's been very critical about is just basically Apple being a closed platform and its fees. And, he says that, it's not even clear if Vision Pro will support WebXR, OpenXR, and if so, how extensively. In-app will be similar to what we see in iOS today, highly limited, and where permitted, Apple will mandate a 30% fee, which doesn't work for high-value NFTs or related experiences. So I just think this is just a really interesting thing that I don't think enough people are talking about. It's like, it's definitely not a given that the Vision Pro and that Apple will be a positive thing for Web3. It might be, but we don't know, and Apple's history does, create some cause for concern.
I think we lost Lawrence's audio. So while we figure out your audio, Lawrence,
how about now?
There you
got
are.
Me?
What an
Sorry
easy
about
solution that was.
Sorry about that. Okay. Does the price point basically kind of make it an issue as well? I mean, you talked about that high price point. Is that basically, are we kind of trying to read too much into this when we're not even sure whether or not people will adopt something this expensive, and whether or not there's even any interest among people in the crypto community to spend this much money on a headset?
Yeah, the price point is fascinating. I mean, this is over $3,000. Here's a few things. This is just my personal opinion. Apple does have amazing capacity to surprise. This would not be the first time that Apple's launched something and everyone's like, this is the craziest thing. This makes no sense. And then everybody adopts it. So who knows? You just never know like how people will react to kind of Apple products. But one of the biggest criticisms of the metaverse, specifically the crypto metaverse, has just been that it's like really not usable, that the headsets are really heavy, that they make people nauseous, that, it doesn't look real. So at least in some of the initial reviews of this headset, it does seem to be a pretty impressive experience. Obviously, there's some criticisms here and there. I heard that, it might still make you nauseous, but it does seem that like the headsets that we have now, the hardware that we have now is not particularly amenable to mainstream adoption because it's just not that easy to use. So I don't know if you need to bring it to that price point to get a better experience, but I guess that's what Apple is arguing.
Emily, it's interesting you bring up this narrative around Apple and Web3. We know that Apple charges that 30% tax on in-app NFT purchases. But we've also heard here on the show, I believe Axie Infinity said that they were launching their new game with iOS, and STEPN recently said that they are integrating Apple Pay. So I wonder if Apple is becoming a little more friendly, if we're going to hear Apple slowly integrate with Web3 more. I don't know if you've heard anything like that in the industry, if you've been able to speak to anyone.
Yeah, great question. So the Axie Infinity thing is really interesting. What I understand though is that that's kind of like a light version, and that like some sort of use of NFTs are restricted. So it's not exactly the same experience. There are some restrictions. That is my understanding of it. But actually, another person that I reached out to for this segment is Sebastian Bourget from Sandbox, who had a very, very different take from Matthew Ball. Sandbox was extremely enthusiastic about the launch of the Vision Pro, basically, saying that it has the potential to trigger a new wave of innovation from creators. This is such an exciting time to be in Web3 and the Metaverse. So yeah, that's a very different take. They seem very optimistic about it. They did also caution, though, towards the end, this is again from Sandbox, that, there are some concerns about, this big company, controlling the gateway to mixed reality, and just the concern about platform control, which we've seen also with concerns about Meta as well. With this idea of the so-called decentralized industry resting in the hands of a few powerful companies is obviously a cause for concern.
So some of the Metaverse tokens took it on the chin with this whole thing involving Binance and Coinbase. So what's that about? Is this it? Is it over for?
Yeah. Is it over?
Is it over?
It's never over. I mean, so this is so this is like real. This data it just is a really funny data point, because we basically had two really important things happen right around the same time. One was the launch of the Apple Vision Pro, which in theory is very bullish for the metaverse, at least according to Sandbox. But then you also have several metaverse tokens being listed in the SEC suit. So yeah, I think the red that we're seeing, this is kind of this chart by Coindesk Indices is sort of roughly timed to the Apple Vision Pro launch. But the red, I think, is probably responding more to the Binance suit, because obviously that is, kind of a critical question for these tokens. So it's a little hard to tease out what exactly they're reacting to there.
All right. Well, I guess we'll have to wait and see what the reception is to the Vision Pro headset. I guess if you have $3,500, maybe you can try it out. All right, Emily, thank you very much for that segment. Let's move on to our consensus segment that we've been doing all week here. We are exploring the crypto industry's biggest themes based on conversations that were held at Consensus 2023 back in April. Here now to discuss the Consensus at Consensus report is Coindesk Web3 reporter Cam Thompson. Hey, Cam.
Hey, how's it going?
Not bad. So we're talking about your chapter here today, the way forward for DAOs. What were your key takeaways?
Yeah, so there were three key takeaways I found when listening to these discussions and writing this report. The first one is that DAOs should be decentralized. DAOs are defined as decentralized autonomous organizations, and there have been some cases where they haven't necessarily operated that way. There's this term decentralization theater that's thrown around a lot when a DAO brands itself as being decentralized, but doesn't necessarily operate that way. Also, in DAOs, with this concept of decentralization, it should matter in the good times and the bad. So whether it be putting forward a governance vote to bring some good to the DAO, or whether it be, punishing a member who might be a bad actor at the end of the day. So that was one takeaway. The second one is that there's a lot of voter apathy within DAOs, and some of the panelists were talking about how each member of the DAO should have one vote, and it should be a more equitable system. That way, one person isn't having a much larger say in what goes on. And the third takeaway is that, at the end of the day, DAOs should be, how do I say this? I guess geared towards solving real world problems with Web3. So rather than just trying to make money and capitalize off of some DeFi concepts or some hype around the space, there should be some real world problems that people are trying to solve. So whether that be crowdfunding, there's many use cases that people talked about, but those are the main takeaways that I found.
So Cam, you use the word should a lot. And I'm just curious, in your take, what is the actual status now, right? So yes, DAOs, they should be decentralized, they should be kind of not doing this sort of decentralized theater. But in your observation, what is the status quo? How far are we from that kind of ideal reality?
Absolutely. So in the report, I talked about a couple instances, when defining these takeaways. So in April, there was a vote within the Arbitrum Foundation, which was a vote to move 2 billion tokens into the Dow Treasury. However, although this was branded as a vote, it turns out that the actors behind the Arbitrum Foundation actually had moved that money already, and they were just putting it up for ratification. So it wasn't really a vote at the end of the day, and that's where some of this decentralization theater comes into play. Another instance is that in February, there was a vote in the Uniswap DAO, and Andreessen Horowitz, which is a very large VC, has a large number of these Uniswap tokens that they were able to vote with in the DAO, having more voting power than a lot of the holders. So there are quite a few instances where DAOs aren't necessarily decentralized nor address this voter issue. And it's something that people are working towards and are talking about. So, it's certainly an interesting time to be talking about this. I think there's a lot of questions that come up. So that's why I'm using should, because we're not really there yet, but I think people are trying to be for sure.
How do you think that these reports are going to help shape regulation?
Absolutely. It's an interesting question, Jen, because, a lot of these DAOs emerge from DeFi protocols, and DeFi does not want to be regulated. That's a large part of the DeFi ethos. It's pretty far away from, getting some regulatory attention. But I think that if people start to understand, why they're creating DAOs in the first place, why decentralization matters, that's a huge part of why people set up these organizations in the first place, to give token holders a voice to be able to help dictate the direction of these protocols. And how to, wrap that up and make sure that people are still, acting in a decentralized manner. I think that, as we pursue down this path of defining more clear crypto regulation, DAOs will certainly be relevant. They'll come up in conversations. And I hope that, they aren't just written off as Ponzi schemes or casinos. And there are some real conversations about how, these can be really useful tools for, solving real world problems. But, there's a little bit of a road to get there.
Decentralization theater, by the way, is what I was doing earlier at the beginning of the show with my whole...
We've come full circle.
Talk about bad actors.
One day people will get your bad actors joke, Lawrence, and
I will never gets it.
You're for it.
No,
Cam,
never. Yeah, thank you.
Cam, thank you very much for joining us this morning.
Yes.
Awesome. Thank you.
That was Coindesk Web3 reporter Cam Thompson. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-hosts Emily Parker and Lawrence Lewitton. First Mover returns tomorrow, 9 a.m. Eastern Time. In the meantime, you can catch the hash today at noon. You're watching Coindesk TV.